What's up, ladies and gentlemen? This is the recap with Let Cash Accumulate over days. Today is August the 16th. Today is Wednesday. Today, I know yesterday on the recap, I apologize. I said yesterday was Wednesday, but yesterday was Tuesday. Today is actually Wednesday, August the 16th, you guys. And this is closed bearish. Woo! Bears get jiggy. Hey, hey, hey. That's how the vibe is right now with the Bears. I'm telling you, it is lit. They clawed out. They clawed to a bottom. But before we go any further, you know how we gotta first and foremost, um, so I can talk to y'all how I want to talk to y'all. This is recap coverage from the stock and crypto market. These are live ideas of thought and studies. This is not financial advice on this stream or with this company. So, with that being said, man, let's go ahead and get into it, man. Let's go ahead and get started, man. And this is closed bearish today, you guys, for real. It opened bearish, it closed bearish. The lower low pattern is continuing. Market it's coming down. It's really starting to fill in with the downgrade and the talks about it and the recession fears and inflation fears. All this stuff is coming back out of nowhere again. And this is what's going on. And this is pre-market was bearish though. And it was just going down really from yesterday, if you think about it. So just continue selling, basically. That's all you got. 2 day selling pressure right now. Game's on now though. Game's on. It's looking like, right now, as of right now, can't lie, it's looking like the August Bulls. It looks like the Bulls are gone. It's a ghost town in Bull City right now. It's nothing. No Bulls, no bullish momentum, nothing going on to the upside right now. So Bears are just taking the market on down back into trying to get into their territory. That's what's going on, and it can happen. I think we still got a long way to go. I wouldn't panic here, but definitely that caution meter should be turned up now, though, even more. If it wasn't before. So, but for sure, be cautious here, though. These levels in the market overall, but everything closed down today, you guys. It was ugly. The data was actually good, the Fed minutes, but market just spit it out. Bears just ain't really having it, you know. So a lot going on. This really got a lot to do with they said Michael Burry too. Everybody said he warned you, follow smart money, but we don't know. We'll see, man. We'll see. It's a lot that can obviously happen and change overnight. So as I tell you, it can go either way each day. But we're gonna get into the charts and numbers here. We're gonna look at the data first. What's gonna happen tomorrow? Because there's still data. They're not done. A little slight data tomorrow. And then you're gonna see the data chill out. But there's a lot of talks about next week. We'll talk about it next week. But everybody's kind of preparing for an event called the Jackson Hole. So be prepared for that. We'll be talking about that next week though. But yeah, man, that's what's really going on right now. We're looking really bearish. It's looking really ugly. The market was priced in too high. You're seeing a massive pullback, a massive sell-off. It's definitely at an oversold area right here. 440 is major support on the SPY, and just everything where it all closed is just major support across the board. I mean, Nasdaq, Russell 2K. If this support doesn't hold you guys, it will be no more. Thinking the top is in. As I've been really saying, the top has really been in. It's been glued, but now it's about to get sealed. So at this point, this level of support right here in the market don't hold you guys. It is gonna come down, and hey, it is what it is. You kind of got to be understanding. Like people did say this could happen too. That's why I say it can go either way, either day. You just never know. So, but I think really honestly, like I said, you don't want to panic right here. You definitely want to stay humble. Let everything play out. Let everything pan out. I mean, the market's gonna do what it's gonna do. Honestly, right? Obviously. So, I mean, at the end of the day, you just need to do what you need to do. I mean, like I said, have more than one source of income. Don't depend on this market. Don't worship this stuff. Look at it as a tool to help you escape something. But at the end of the day, teachers on. We're gonna go ahead and get started though. Indices closed bearish. Bears. Hey, hey, one more time. Hey, they turned out. I'm telling you, they are turned right now. The Bears are turned right now. They are clawing this market down, and they're happy. Some of them are getting that relief because they were getting white, but if they held there, it's starting to come back. But let's go ahead and get into it. Stocks fall a second straight day. Nasdaq drops 1%. It was ugly. As Fed cites lingering inflation woes, the Dow Jones Industrial Average dropped 180.65 points, or 0.52%, to end at 34,765.74. The S&P 500 dipped 0.76%, closing at 4,404.33. Meanwhile, the Nasdaq Composite declined 1.15%, ending the day at 13,474.63. So, down. Puts. That's what's going on. That's where the excitement's coming from. Eventually, like I said, man, you're seeing it fall now. It was due for this, obviously, but you just never know. Like I said, the downside, it's not going to go down forever, and obviously, and the upside, it's not going to go up forever. So, like I said, I think there's an inverse pattern at play, obviously, going further, but because eventually, I mean, this celebration is going to end. They're going to take profits. Let's just keep it real. So you just got to understand what's going on right now. It's a tick for tack thing here happening. It was a long fight right here, consolidation in this area, and it looks like the direction is chose on going down. But we do not know that currently. It still can go either way from this level, you guys. This is the last leg of support here in the high area. So, this 440 does not hold overall SPY. And, we're going to look at the charts numbers here momentarily, but everything else, triple Qs, where they don't bounce. If nothing bounces, it's over. So know that, and that's what we're looking at right now in the overall stock market, you guys. Crypto market is even selling off too currently right now, so be cautious with that. Economic data this week, though. Tomorrow, last day, jobless claims data. Philly Fed PMI index, the market is data driven, so this could be the only hope the Bulls have right now, honestly. I mean, if it's so data driven, if this data is good, then it may hold the market up and, make it a pop to the upside. We don't know. But if this data is looking like the data has been brushed off and it could be good and still go down, then that's probably likely what it could be here for this week economic data and going into tomorrow. So be on the lookout for that in the morning at 8:30 a.m. It's pre-market. There is data coming out. So we're going to be looking at that closely. But Fed minutes was wild today, very volatile. Like I said, it was going down, it was going up, it went back down. It was wild. It was really, really wild. But that Home Depot earnings, you're seeing it started like trying to creep up, but they actually came back down a little bit. And then Target actually went up, you guys. So one stock to buy, one stock to sell this week, and they was wrong. Wall Street was wrong. They tried to manipulate, trick, try, frustrate, and fool you. And they said sell Target, but Target was actually a buy, but it did come back down actually by the end of the day. It just stayed kind of in the same range. So, but it did gap up, so Target was a buy. But we'll see about Walmart in the morning before the open. That's the key now. Looking at Walmart, Walmart could really save or hurt the market as far as retail this week and what's already happening and what you're already seeing. So keep that in mind. Be on the lookout for Walmart tomorrow morning. It's going to get very, very volatile. But that's pretty much it as far as data, man. Let's go ahead and get into the charts and numbers. Starting with the SPY. Market close bearish. They tell you, I'm telling you, give the program is lit. And don't think because it's going down, nobody's making money. I'm telling you, everybody's making money. Nobody cares about that. So, at the end of the day, SPY closed right here, 439.77. Drawing is absolutely 100% correct. You watched the recap yesterday. Hit that like and subscribe button. It just got rejected right here. It did right here. No lie though. No lie. Today was a level day for LCAOD. Because I can't. Got to be honest, I got to agree right here. I thought this was a bullish breakout about to happen here as well. You know, it did pick up that momentum, but that was a fake out. You know, it faked the whole market out, you guys, and it didn't push higher here, so it got rejected. So that's resistance right here. You got to write a R. So that's your top right here. You know, and it was telling us that yesterday basically, but you know, it did retest it one last time, and then here, towards the FOMC data, obviously. You know, it popped up. It did pop up. It retested 443 one last time, but that was really just a big short there going on. That's all that was. They took it down to where they wanted it after that, and where they wanted it is where they got it at, where it's at right now, currently on the spot. That's what the Bears wanted. 100% correct. Like I said, congratulations, puts. Congratulations, Bears, for clawing and getting the market back leveled and bringing back reality to the market. There's nothing wrong with it. I really like it. You know, I like the change. I don't mind it. You know, if there's an opportunity to make prices cheaper, you know, go. I'm all for it. So yeah, that's what's up. You know, for real. Just like I said, never give up. Obviously, you know, if you were a bull, obviously, and because it's still a bull market. Let's be real here now. You know, before we go further here, just know that I'm looking at the numbers here in the chart. Yeah, full bearish momentum. You can't take that from the Bears right now at all. You'll be talking crazy if you try to say that. But at the end of the day, the numbers are telling us bull market. This is still too high, you guys. So at the end of the day, if they're going to play this game as far as a downgrade, you're going to just see more lower lows. That's what you're going to continue to see until about 420 on the spot. Then we can start saying, okay, the market is flipping from bull market to bear market, which means the market was going up. You know, people knew it just felt like it was going to just keep going up, but now actually the market is going down, and it's about to get ugly here going into the fall and the winter and coming into the new year. So who knows? It could be another mild recession at hand. And, you know, this could be the real start of it. So pay attention closely here at these levels. Like I said, because overall, people are going to trick you right now. You're going to hear a lot of people say, oh, no, bull market done, yada, yada. Bear market it is, bear market this, bear market. But at the end of the day, they don't know that. They hoping that. So what I'm telling you is pay attention to the charts and numbers, you guys. That's going to tell you your answer at all times. And like I said, overall, full on bearish momentum, but the numbers are still saying and screaming bull market. So we could bounce from here going into tomorrow. So upside levels I'm looking out for. And you know, it could definitely not bounce. Obviously, you see what's going on. So it can go either way. But upside levels first here. We'll race the joins, hit the like, subscribe button. Check out the last recap though. That's 100% accurate. So we're gonna go about tomorrow and going further here. So upside levels on the spot. Ooh, look 5 days out now. When in doubt, zoom out because it's very doubtful now. So you need to really start zooming out about 5 days out here to about 1 month now, honestly. I'm still not seeing another side over here, right? So now you need to really look 3 months out. Oh, okay, there's the other side. Whew, I was panicking. I didn't know nothing was happening over there. So yeah, something has already happened over here, guys. Now we're just channeling back into it, you know. Started the bull market all the way, still bull market slipping now. Boom, you get what I'm saying? And if the market flushes back to this low here, is what I'm telling you, 420. Now this completes the far as the whole bull market is completely done. Era or what you're hearing now on Wall Street or whatever, whoever you're, you know, if you're just looking up stock news, you probably just seeing a lot of people say about this right now, just talking crazy. But until you see that on the spot, then 420, then just know we're still in the bull market, you guys. It's still too high. So at the end of the day, it is going to get lower, or it's really low enough. So the market is going to start to pick its decision. It still is, you know, it has chosen direction currently, but the decision is all ongoing. You know what I'm saying? It can go either way, either day. So upside levels, like I said, 3 months looking out now. On the spot now, all I'm seeing here is They need to push back to about 440 here. If you get back to 440, the next level I'm looking out for is 441 on the SPY. You know, if that holds, then the next level I'm looking out after that is about 443 here to the upside. I think, you know, at least we're still in a bull market, so I think at least that you see the bulls have been trying. At least they have been trying to get a little uptrend going. I think they try again and just keep trying like they have been. And you know, it may keep failing like you're seeing here on the opposite side as well. So, but I just think that the Bulls are definitely going to give you a shot here. So I think about 443 is a level that they need to really get back to really just kill a lot of momentum, man. And it just, you know, it's a level where you know, if the momentum's not reached there, it can really get ugly, you guys, really quick. So that's what the Bulls need to be trying to accomplish right now. If they're so-called bullish and, you know, everything is still their way as it has been all year, but just these past 2 days, really this past 5 days to a month, it's been ugly for them. So that's the upside levels, though, that they need to get back to, you know. And if you can even get there, then obviously your target by the end of the week is 445 here, or, you know, going further here on the spot. I think that really, okay, silenced the Bears, or the Bears at least obviously took all that profit, and then it'll just be leveled back out again. So that's what it is for the upside. Now to the downside, though, you know, because it can go either way or both ways, but you know, to the downside, if not, 440 don't look like it's even about to push, you guys. Or if it's already down in the pre-market to about 438.70. The next low level I'm looking out for now is that 436 level here on the spot. I think that's this part of it's just part of the downgrade still. Then you're just getting that lower low pattern. But here, if this 437 doesn't hold, because this is where all this bull market started, and then it broke out. If this is your last leg of support, if it doesn't hold here, you guys, if it flushes up over here, then now you're really starting to look at the downgrade, and you really got to start thinking that, okay, the bull market can really flip to a bear market, because you know we've seen it before. So don't be surprised. So better look out for these levels going further here on the spot going into tomorrow. Triple Qs, you guys, 362. So it's looking very ugly for them. They broke, like I said, below their support, below 100% correct. You see the drawing here, and then the algorithm here looks the same to me. To the downside, they even gave it to you twice. You got lower than that though. So 362, you guys, like I said, looking really very ugly for the triple Qs right now, and you know, just looking like, you know, they need to definitely pop here. I'm gonna remove the drawings, obviously. Hit the like, subscribe button. But to the upside, it just looks like 365. They definitely need to give you some type of momentum to bounce there. I just think, you know, that's a level, that's a key level for the triple Qs. That's what they need to try to do. If the bulls are still here and it's still a bull market, like the numbers are saying, you know, this is an area where, you know, this is a great buying area. So it could be brought up here. You know, it's right here at a critical support, put it that way. So it can be brought up right there, and, you know, just be on the lookout for that. You know, that look like it's going to do that. And it holds, actually. The next level, I'm telling you, it needs to go ahead and creep back to. If not, it's looking ugly. It's 367.50 here. And I think, you know, that'll just silence the Bears, you know, or like I said, not silence them, but they'll go back into hibernation because they took profits. But you know what I'm saying. And like I said, that'll be back level. Everything will be back neutral at least. So that's the upside levels I'm looking out for on the triple Qs going further here. Getting critical now to the downside. You're already below 363 to me, so if I see in the pre-market it's creeping down at 361.20. The next level I'm looking out for is 360 here on the triple Qs, you guys. And then, you know, I think if that don't hold, the next level is 358. So it can really start to like creep back down, you guys, for real. So better look out for that going further. DIA. The DIA. The Dow Jones. The Dow Jones said drawing looks correct, absolutely correct. Actually, yeah, that's 100% correct. Um, so same, boom, boom. The rest of Johns. Going into tomorrow here in the DIA, upside levels. Definitely need to get back to 349 here. The next level after that, if you can get there, bulls, you must get to back above 350 here in the DIA. I think that's just your target now. I think that's just a happy target of consolidation and a relief. Like, okay, whoo, the dip was at least bright. Like I said, that's neutral again. And then, it just depends on what the market data is saying the rest of the week, or just how the market is even really feeling, really. And, to see if you're going to even get your push to about that target by the end of the week. It's about 351.50. So, you want to see those first levels first and see if they can actually hold, not get rejected. But here to the downside, if not, 347.40 don't hold. The next level I'm looking out for on the DIA is about 345.60 here to the downside. And I think that's just creating a downgrade, creating a lower low pattern. The mountaintop is forming. She be on the mountain. She be on the mountain. You know what I'm saying? Look, it's just forming the mountaintop. That's all it's doing. And it's coming back down, you guys. That's all it's doing. So pay attention to this level right here. 345 is a very key level. It's where the bull market actually started here back in July on the DIA. So look out for that. If that doesn't hold, it's going to get ugly. It's going to fold. IWM. 185. Jordan is actually correct, and then they doubled it. They times it. So I'm going to put times 2, because they did it twice here. Boom, boom, and then they did it again. Boom, boom. So you got lower than we expected. So that's even more money. That's very good for the Bears today. Congratulations. But not looking good here for the IWM, right? So Marissa Jones going into tomorrow, though. Upside levels, it can definitely still recapture, though, even though it's not looking good. 186.30. They need to, form a bottom in some way, shape, or form. Form a bottom, get the market off the ground, or get the market off the free fall, basically. Not even on the ground, or put a ground in. That's what they should be trying to do with IWM. But that's the levels right there. And then, you see that trying to hold in, just check out 187.70 here. It may push back to that. I think that'll be a relief top and, momentum. That's what they're trying to at least do now at this point. They're trying to get anything they can right now, the Bulls, and that's just what they will be relieved with this. And like I said, see if it gets rejected or if it keeps going, because the next level is 188.50 here. And then, you have a double topping and triple topping at this point. But it would be definitely off the ground. It could be the upside levels. To the downside, though, you may not even see that. So I'm looking at 185 here closely. If that don't hold, next low level is 183 here to the downside on the IWM. And that's just like I said, the lower low pattern is coming in. It's just continuing to happen. The downgrade is continuing to happen. The market's actually coming back to reality. People are happy about that. This is starting to look like this in a way. So, if that is the case, it's a lot more downside. You get what I'm saying here? So be on the lookout for that going further here. VIX. VIX, volatility, the speed of the market. Everything. The direction of the market, if the VIX is up, wait, the market is down. If the VIX is down, wait, the market is up. The VIX is up. Wait, the market is down. So that's what you're seeing right now. The VIX putting another green candle, you guys. And that's why you just seeing the market just continue to sell today, even with the data. The VIX, the gap fill here is not even looking approachable right now. This gap fill is not looking approachable at all, this circle here. So maybe they think they filled it already. And, that's what I'm saying. That could be long gone. The VIX may be about to get back to here, you guys. This level here, $21. And like I said, if the VIX gets to that level, then you really may see the market flip overall from bullish market to a bearish market. So just look, the VIX is telling us something right now. It's signaling something. It's warning us something. You need to be prepared and cautious of it. And, look at it closely. These are big green candles right here on the VIX here too. So, You know, if it's a lot of buying like that on the VIX, look at the previous candles, how they are on the VIX. If it's a lot of buying, then just look what is followed behind it. I see a lot of selling overall, so just be on the lookout for that, you know, or just be on the lookout to see if the VIX is not serious. And you know, we got to start thinking about like how it was in March here. You know what I'm saying, of this year, and you know when it did this spike here, it could be due for one of those. So we don't really know, and you just want to be cautious with the VIX because, like I said, that is what is controlling the market. It's the direction of the market. It's the speed of the market. So remember that going further, the volatility. But from the 1 day perspective here, man, going further here, Marissa Jones, hit the like, subscribe button. Um, the VIX field. So upside levels tomorrow. Now I'm really looking to see $18 fill. That kind of has to get filled here now. The VIX to the upside, and if so, then you will see way more selling than what you've seen. What you're seeing now, you guys, is going to continue to happen. So be on the lookout for that. Now to the downside here. You know, VIX look like where all this Fed minutes data started here in this weekend candle. I'm just looking for a fill back down to $15.60 here to the downside. Then I think you'll have maybe a little recent market bottom in, just a recent one. If you can get the VIX back below $15.60 here, and then even if you can get it to flush and clear this whole candle here at $14.90, and look like it's gonna start to really get back to this gap fill still, maybe possibly still, it's actually still in play. It is, but it's just not looking that way. It's not looking like the candles are not facing it at all. So, but just know it's just something that, the algorithm could want to switch back to. You just never know. Just play it closely on the VIX and be looking out for it to go either way, going further. Caterpillar, Caterpillar, construction. Woo! They hit the target here to the downside 100% right here on Caterpillar. So construction looking like they done profited off of what they needed to profit off of. I don't see 290 being in play anymore this week now, you guys. It looks like that's out of the range. But Caterpillar is one of those names where they can still move here to the upside. Look 3 months out, they had a wonderful earnings, still in all here, but it's just looking like now that summertime Caterpillar, they're getting their money now. They're getting their profit. They're taking their profit. The summertime's about to be over with. Yeah, they did all that at the beginning of the summer, during the summer, because they had to do what they want to do now. They're chilling now. The summer about to end. They're chilling. That's what it's looking like. What the chart is saying anyway. So Caterpillar just looks like it can just be sitting at a consolidation area here soon, and you'll probably see it for a while before you just keep seeing it sell off like this. I think it's just moving with the overall market now, and it had a lot of data this week following it, so good one either way. But to the other side tomorrow, Caterpillar 270, 590 here. If you get there, the next level I'm looking out for is 278 here to the upside on Caterpillar. I think that creates, a little bit of momentum where they can consolidate. At least they won't be topping that at least, but 280 will be a goal going long. Maybe could still be in play here too as well. It's close, but yeah, this is the range here now to the upside on Caterpillar. To the downside on looks like 273 doesn't hold. The next level I'm looking out for is about 270 on Caterpillar to the downside. So be on the lookout for it to go either way, because it can. And trust and believe it will if it wants to. So yes, sir. Amazon. John is absolutely correct, looks like. That's what's up. So Amazon here 135. Now it needs to recapture to the upside tomorrow. And if it can, it needs to push back into the channel here. If the earnings were so good, like they say, 136 should recapture. And I think like I said, the bottom will be in at least for now. But you may get even rejected, so be on the lookout for it as well. But you know, if it gets here and you see a push, the next level is 138. So just know that for Amazon. Um, but yeah, here to the downside, Amazon's already below 135 here. So now you're starting to look at, you know, Amazon starting to uh, flush here below 134. If you get that, the next level is 133 here to the downside on Amazon. You know, if that don't hold, you may really just get all the earnings gains wiped here, and Amazon could be sitting at about 130 here as the bottom. So better look out for that going further here. AMD, last but not least, when AMD went all the way back to Friday, Monday area, didn't they? 106 close. John, absolutely correct here. Like I said, they times it by 2. So congratulations again, bears and puts. But to the downside, you know, it was got real volatile right here. You see, like I said, they're a dollar above where it was already at previously here. So just looks like that AI stuff is really like, you know, just looks like AMD is going to be following suit with the videos earnings next week. Basically, that's what it looks like. So depending on that earnings, depending on the way they're going, that's what it looks like at this point. So AMD here to the upside though tomorrow. Looking for a pushback to 107.80 here. If that holds, the next level is 108.80. You know, I think that creates the bullish momentum and lets everybody know and calm down. Like, hey, we're still in a bull market now. Do not get it twisted. This could be what they bulls wanted. So you're gonna look out for it to go either way. You know, and if it pushes here, the next level is 110. So that could be like a relief in top here by the end of the week or next week. But if not here, you know, check out rejection obviously here to the downside, and 105 don't hold. 105.50 here don't hold here. The next low level I'm looking out for here is that 103.20 on AMD, like I was saying previously this week. And I think that's just a level they're trying to really capture here. The bears, you know, if the market is going to continue to go down like it has been. But that's pretty much it, you guys. That's pretty much it. The earnings today. Target, like I said, Target did go up. I'm gonna show y'all this, and then we're gonna wrap it up here. But Target did go up, you guys, in the earnings match. 125 to one. What's that? It does say 139. So 125 to 139, but nobody got it. Open market, they only got 135. So that still was a good move, but then it took them back down to 130. So that hurt and killed a lot of momentum. Then it bounced back to 133, but it took them all the way back down here to 128. So now you're only really looking at a $3 move for earnings on Target. So all of this was private, you know. Private earnings right here. So capital P. That's what I was doing. Capital P. Private earnings. So Target did something like that. But you know, they're still going long. Target's a good company, obviously, either direction. Something to be looking out for. But that's pretty much it on earnings, man. We got earnings tomorrow, you guys. Let's see, it was more earnings like Cisco. They went up about $1. We got earnings tomorrow. Walmart in the morning, so better look out for Walmart. It's about to get volatile again tomorrow. We got the final chapter of data this week, economic data, so it's definitely about to get volatile. Be on the lookout for what's going to happen tomorrow. We'll be back with another recap, ladies and gentlemen. This was the recap with LCAOD. Stock futures are a little changed Wednesday night. So it's mixed and just it's just solid on the bull side, man. Bears are celebrating and partying like how the Bulls just was. So hey, respectfully, you know, it's fair. Teach us all, you know, don't have your emotions in it. You know, like I tell everybody, win, lose, or draw, stay the same. Stay the same way you came in it. You feel me? Think about it like that. You know, stay humble and don't give up. Again, you know, stay consistent. You know, whether you're actually doing it or you just continuing to still learn about it. Stay consistent, man. For real. The key is about getting your confidence up to put in more. Know that. So, but that's free game right there, and this is a wrap here. We'll be back tomorrow with another recap. Like I said, ladies and gentlemen, and this is closed bears today. We'll see how they open tomorrow and what they're gonna close tomorrow, ladies and gentlemen. Peace.